The big punishment meted out by US and European Union is that Russia's central bank cannot access part of its 630 billion reserves. The second punishment, US has sanctioned some Russian banks, the top two banks and a few others. Also, European Union has said it will remove an unnamed list of Russian banks from the SWIFT messaging system. I'll come to SWIFT and sanctions in a minute. The bigger move is not allowing the Russian central bank to access its reserves. Now, this is somewhat of an out-of-syllabus move for financial markets. They don't know how to react. See, central banks don't need dollars on a daily basis to pay bills. The Russian central bank needs dollars today to protect the ruble from falling. And the news that it can't use almost half its reserves has led to a run on Russian banks, and we have seen the ruble falling. Russia's reserves are held approximately in this proportion. 30% are held in European securities, gold 25%, dollar 15%, renminbi securities 13%, pound 7%, and other sundry securities 10%. So US and European Union banks can impound a little over 52% of Russia's reserve, some 300 billion. But some are wondering if Russia can sell its gold for dollars via China or Cayman Islands. Also, the non-sanctioned Russian banks can earn dollars by transacting for gas, metals, etc. That will, these are banks which may not be under sanction and may not be under SWIFT. Okay, but now let's come to SWIFT. How can SWIFT hurt? First, before we come to SWIFT, let's go to sanctions. All dollar transactions have to be cleared and settled in the US. Now, sanctioned banks cannot be counterparties in the US clearing system. Okay, that's sanctions. SWIFT, the full form is Society for Worldwide International Telecommunication. Basically, SWIFT is a messaging system to confirm whether the party that is paying has the money in deposits. Now, you can always send messages even without SWIFT. Russia actually has developed a parallel system with 23 foreign banks as members. So, in the view of experts, the list of sanctioned banks is more important. Now, we don't know if banks removed from the SWIFT are the same ones that are sanctioned by the US. So, the best case for Russia is if the central bank can get some dollars by selling gold reserves or securities to friendly countries. And the other, if all its banks are not sanctioned, then Russia can sell gas, oil, fertilizers, metals through these banks and earn dollars. Now, the central bank can take these dollars from Russian banks and support the ruble. Worst case for Russia, if even friendly countries like China and India are scared to deal with Russia because they may have second round sanctions. Already, most European banks are not financing any Russian commodity trades. So, oil and gas prices have shot up. This is bad for global growth. The other problem would be if someone defaults. The worst case for Russia is if ruble falls so much, inflation will shoot up, no growth because companies don't have access to dollar bonds, to dollar funds. Companies are also paralyzed by capital controls that Russia has already started imposing. Russia has raised rates, it has banned foreign funds from selling shares. So, there can be a default if someone doesn't get the money. What will be India's hit? We will suffer because of higher gas prices. That has pushed up crude oil prices. India also imports 50% of defense equipment from Russia. Besides crude, India imports fertilizers, coal, gold. So, all these can be disrupted. India can also be hit if all global commodity prices rise. Global inflation, metals, fertilizers, they've all already surging. But the bigger problem will be if there is a global default because Russia is not paying back. Now, the situation is fluid. European Union has not named the banks that are out of SWIFT. US also has not sanctioned all Russian banks. So far, Russia is not as bad as Iran was during the nuclear punishment imposed by President Trump. At that time, India paid Iran through UCO Bank, which had no exposure to international banks. Other countries can also ring-fence some banks and pay Russia. European Union also may tighten less if Russia retracts from the war. But Russia is even pointing to the nuclear option. So maybe at the moment, if you want clarity, we have to look at the politics. We don't know how bad things will get or whether they will actually improve. The issue is political. So let's watch politics and diplomacy. Financial markets are only a derivative.